Hi, David here with Futures Trading. Got another price action method for you. Now, there's three components to this. One in which you can probably view in, I guess, another way. So you could say it's four, but it's really three. And I'll show you the fourth one, kind of how it works. But it's mainly the three that I want you to focus on. So far, I released the no touch method, and I hope you took a look at that. If not, I'll have the link below. And again, all of this need to be viewed in context. So I released the market structure as well, and I released the trading ranges, static levels, chart scale. That's kind of all in one. It's a three component in one video. Try to give you location. So you want to use the price action methods that I'm releasing in light of the location, but do not essentially take this without understanding what is a trend. And I also released a video about that as well. So you'll want to make sure that you have your direction right, and then you'll want to make sure that the location is there as well, and then you want to start utilizing the price patterns. So everything I'm kind of releasing is it should be traded as a whole. All right. So hopefully all of this will become beneficial for you. Again, I've been doing this for many, many years. And again, this is all about simplicity. And that's what I'm trying to lay the foundations for any new trader or someone that's been trading for a while that may just need an edge or just redefine some of their entries. This should help you. Uh, the videos to all of that will be left below. If you don't mind, leave a like or a message, and I'll definitely respond back to you. And I appreciate you taking the time to watch. So let's get into it. The rejected twice setup. All right, so here we go. The bar here has a RM and a R on it. So it's kind of two things going on with this. And there's another text that you'll probably see on the chart. I'm going to scroll through and see, can we find it? Really simple stuff here. All right. So the mid of the bar has this black marker on it. All right. So price move down, push back up, move down, push back up. Let's go. All right. That's the mid. All right. So that's that RM. All right. So now the R. The R is just as simple. Okay. We got the close. They reached down, pushed up, no close back beneath the close, reached down, pushed up, no close back beneath the close. Let's go. All right. So that's that way of looking at it. It happens to the downside as well. It's all about the close. Okay. We have a rejection of the close, have a rejection of the close, and push down. Maybe not a lot. Again, you got to make sure that the trend is there. Remember, I told you before we even got started with this, it's all about context. All right. And location matters too. All right. So we have the mid. We just touched on this, rejected twice. You know, the red bar stopped. Okay. It's not so much the color, it's just them not willing to close beneath that price. That's really, really important. All right. So over here on this side, we had a breakdown here. They ended up breaking down. They had the rejection twice here. And then, of course, they begin to break down. All right. Now, what is the other side of the R? Okay. Because you see the R here on the bottom of this red bar. All right. And so the rejection of this close, because we want to use it to go. Okay. Of course, down, and that's when the R shows up above. We want to use it to go down, but they managed to reject that close. They move down and close back above it, move down, close back above it. They have every intent in pushing up. How far is a whole nother scenario. All right, so then we have this bar here is just a bearish scenario here. Of course, price reached up and closed back down, reached up, closed back down. There's the R, stop behind the R, take the trade. Really, really simple stuff, nothing complicated. All right. So, of course, you had the rejection mid. And let's find that other setup. Don't want to be before you long with this because it's really simple stuff. It's nothing complicated. Okay. So here we go. All right. So this is the rejection stall. Usually it happens just like this. All right. So now you get, okay, kind of go like this. Okay. This bar rejects the close. Okay. And then close back up. But then the one in the middle don't give it to you right away. It's a stall. And so they stall you out, come down, hit the price level, and then close back up. Then that RS would show up saying that's a rejection stall. Stop behind the RS. There you go. All right. So that's the price action method. I'll scroll through the chart just a bit to kind of let you see it. And again, it's nothing complicated going on here. Here's another move up, kind of what we just saw. This one actually went a little bit further here. So there's that close. We want to kind of validate that close by, doing the close, push up, close back beneath, push up, close back beneath. If that doesn't happen, and they close back above, after, the key is they have to touch that price. That's all. They have to touch it twice. All right. There's a push. Okay. They did it here. Okay. They did it here, pushed up a little bit, but then they came and ran the bottom. Okay. Now, I don't know if that happened first, but I do know they did push up, first. Okay. Because this candle here touched that price. This candle here clearly touched the price, closed, and then there's a small push here. This candle may have went up first before it ran the low, but that's what you have. All right. So that is that pattern. Now let's see, can we scroll back and see, can we find a couple more? All right. Again, a very simple technique. Here's the one for the mid. Okay. That's the one for the mid here. Well, actually, this came in for the close. I'm sorry. Here we go. This came in for that close. They closed back beneath that price, but you can see they rejected off the mid. It just took a moment, even the more so. All right. So I coded the indicator where it does it immediately. I like the immediate one. Now, you can probably find this throughout the chart, even though it stalls out a bit, but I like it immediate. Like this here, this here. They came up, hit it twice, and then when this candle started to come back away from the mid, go ahead and take a quick trade in that direction. All right. And this is something that you can do in real time. This is not, matter of fact, let's go take a look at that. Let's see, can we get that scenario to show up? I don't want to make the video too long, but I want to give you a chance to kind of look at it and see how it forms. So this is the mid price over here on the axis. Let me get rid of the crosshairs. This is the mid of the bar. That's the price right there. So, clearly it would have definitely been right here at the time. They're coming back up. All right. So if they can reject this close, that'll be bar one. Okay. We have 30 something seconds left. So far, it touched it. And the stop would be right here. All right. The stop would be right there, right behind that bar. If it is to play out. Now, of course, here's the mid. Now, if they close back above the close of the bar, is not all loss. The next thing you want to do is look at the mid. If they close back above the close, we need them to touch the mid. All right, so the mid is roughly, can they make it in 4 seconds? One, yeah, they close back above. So that's not going to work at all. So it's not to say that they can't turn around, but it's not that setup. It's not that setup. It's several setups that I know, but there's not that one, okay? Because they got above the close and they got above the mid. So chances is that that won't pan out. So let's scroll back just a bit more and see, can we find just a couple more of these setups here? And we'll come back and see what that looks like in just a moment. Trying to find you another RS here. Another RS. Okay, there we go. So we have another stall here. Okay, so we're going with the close of the bar. Okay, that's the main thing. Stop right behind this bar, the RS. There's the close of the bar. We have price having hit it, of course, on that open, and they pushed up and closed. Okay, got the wrong thing here. Hold on. It closed upward. Okay, and then this price hit it, but it closed above it. Great. Okay, stop right here. Hard stop. Okay. They offer you, of course, some profit, lean back like they're going to come and get you. And then they begin to make that move again. You had the rejection here off this bar here. Hit that close twice, came back and hit it some more, pushed up some more, and then they tried to flip it on you. Okay. Now they ran the stop here. That's fine. It happens. All right. They tried to flip it on you. Now this price level here, they managed to come right back up there and go ahead and clip that. And then you had the rejection of the mid happen twice here, and then they clipped that. So they're telling you that even though we keep trying to flip it, we're not breaking this prior pivot. So this bar must still be valid. All right. And that's what you have. And then they went on and gave you the bigger run. So sometimes, again, they'll stall you out, and again, that happens now, even on reversals. And this is something that I put in one of these videos. I was talking about a reversal, and I'll say it here. The mid of the reversal is important. on pretty much all of your reversal bars. That mid is important. And this isn't engulfing, but if you were to go with the spinning top here, this big spinning top, the mid is important. So you'll want to you just want to pay attention to that. All right. Now, in the open of the second bar that's higher, that becomes an issue as well. And we'll take a look at some of this on Bitcoin on the hourly chart really briefly before I let you go. Um, they had a rejection mid here of the mid, but it didn't touch it on that first bar. And again, it's all about how I coded. I wanted to do it immediately. Immediately. That's the key. All right. So let's see what price has done so far. Yeah, they went beyond the measure. Now, if it's not happening immediately, all right, let's talk about that. If it's not going to happen immediately, this is the next thing you'll want to do. They rejected that close, and it appears that they're rejecting it again. All right. Now, I don't like when it does this. I don't, you know, no, actually, they closed above it. Sorry about that. They closed above it, so no, that's not going to work. I like to see them do it immediately, but sometimes there's a delay of more than just one bar, more than one bar, and then they'll still turn. You just want to make sure that you see at least two rejections of that close in order to get it to work. All right, so now let's take a brief look at the hourly. Okay, now this is that no touch method that I released and the no close bar. And clearly this is, what they're doing so far. So any bar that has the NC behind it is the no close. All right, no close beneath. And you kind of see they referenced it here, held it here, and again, I like to just outline the chart to give you a visualization as to what's happening for at least two bars. Now we just ran up there and we're kind of doing it again now. So everywhere you're seeing that blue outline is essentially the no close method. Now the hard stop is where the level is at. Okay. Now sometimes you get it, the overshoot, where they overshoot the turn, then come back. And so then, the level would be placed here as well. So, but you can see that they'll feed into these areas, all right? They'll feed into them and then they'll turn. Now, how do you use the range with that content? So now let's look at the range side by side. And again, you can use all of this, all right, and we'll pull back and screen what we just went over. All right, so this is that high, okay, with the rejected twice. Okay, this is the content that we just went over. And so price tend to get really compressed in these areas. All right. So as they move down to the no close level, they may want to come back up and feed back into this no close level up here. All right. And a hard stop is here because this bar here isn't touching that bar's mid. Now, again, I'll have the link to that video below so you can go and, take a look at that and see how that works. This bar's high, it's not touching that bar's mid. Hard stop here, no close there. Now, that's this turn up here. Okay. They fed into that no close level. And this is some fractal reading that I'm going over with you right now if you're new to trading. This is the hourly, and this is that 1 minute chart. These are the ranges that I released. Okay. And I'll have that link below for you to take a look. So if they're approaching the no close level, they may turn back around. Again, here's the R, there's the rejection, here's another one, rejection. And so as they move up, if they're going to feed back into this area, you will begin to use the rejected twice method, or you can use the no close method, the no touch mid with the no close method involved. It's like two approaches to it. You can do that and, kind of ride it upward. Now, again, that works here as well. Try to give you an idea of what that looks like really briefly. Let's go with okay, so this bar's high isn't touching that bar's mid, so it would be a hard stop here. Okay, and no close back beneath this bar, which is not a big measure of difference on that particular price level there. All right, so here on the way down, let's say they want to stay down, you would go with this bar's low, not touching that bar's mid. Okay, no close back above here. Again, hard stop here, not that much of a difference. And again, I outline what is a trend. That's again, that's in the video. That's going to be in the video. Now you have rejection mid as well. You have a couple of them showing up here, but they may run it. But you have again, this bar may pose a problem, but hard stop here where the text or the acronyms are at. Hard stops supposed to be here. Clearly they're trying to turn it. All right, so that they may want to hold that move from above. They may. Okay, and again, you combine the range, and I'll give you a full view of that information now. Now we're going to look at this area as well in context to that range. All right, so here's that range. Okay, here's the ranges in relation to that no close of that bar on that hourly. Okay, there's that turn. They pushed up. There's the range. Here's the overnight range. And then they begin to do the no close as they begin to make their way down. And then there's the drop. All right, so I'm not going to hold you any further here. You want to go with the rejected twice. And again, it's simple stuff. It's not complicated. Let me remove the text and we'll touch on it just really briefly one more time before I let you go. All right. So this bar here, and it can work in any direction, any direction. All right. So this bar here, no close back beneath the close of this bar twice. It's all about you waiting, not just taking fast entries. You waiting. Now on the second bar, you can probably go in and jump it. All right. But you definitely want to wait. Give them a chance to prove what it is that they're up to. Okay. You don't want to just jump in it and then all of a sudden you're dealing with a problem. All right. So that's that approach. And again, we have the RS, that's the stall. We have the RS. Okay. So that's price rejecting on the first bar, the second bar not touching, but then the third bar, well, respectfully, the third bar here touching, and there's not much there because it's supposed to be an upside move here because you have a trend looming in your backdrop. And again, I'll leave the video link there. You tried to have the buy here. Now, this is the flip side of the rejection close. We closed, okay, and then we had two bars that will not close back beneath that close. There's a chance they'll push in the opposite direction there. All right, so I wish you all the best with your trading. Please leave a like or a comment down below. Hopefully this will help you. Take care.